live. Hello.
Oh, and we are live. What's going on, everybody? Welcome back. We got a Thursday session here. Just about to head into the weekend, and we got a nice big old pump on Bitcoin, ripping almost 7K in like 24, 36 hours, something like that. That coming off of a number of potential catalysts, including some positive CPI reads here. What's going on, gents? How are we doing today? How are we feeling about the markets?
Good. It's nice to see Bitcoin and Ethereum finally breaking out of those levels we mentioned on Tuesday. CPI came out relatively bullish. It looks like the market was reacting pretty positively to it. And I think at this point we just have to see whether this rally can sustain. So I'm pretty excited. I think there's definitely some opportunities out there. Even some of the names we looked at last week, they've been popping off. So, yeah.
Nice. What's overall? What are your picks? Have you had any that we looked at on Tuesday that have popped off?
Well, yeah, actually, we looked at Zen, for example, right? We're like, hey, look at this nice double bottom here. Nice big wide double bottom, and we broke out today. I didn't take that trade, to be honest. There was also Dash, we talked about Dash.
Privacy
pretty
coins.
much pretty close to a double there already from that level that we talked about yesterday. So I don't know if anybody was able to sneak into that. Congrats. I definitely missed that one. So privacy coins looks like still pretty hot narrative, it seems.
Wait, what was that? Why is Dash pumping so much? What was the reason?
Beats me, man. I don't even know why any of these freaking things are moving, man. Everything's just against their bottoms and ranges, and just a matter of time, I guess, for these things to just kind of pop off. But you can see, man, there's a lot of double bottoms out there just rallying away, so I do feel like the market is trying to put in some bottoms, trying to push for Q1 somewhat bullishly here. So yeah, let's go through Bitcoin chart real quick here. We'll go through Ethereum, and then we can go through the rest. So we got this nice big breakout. We had that nice bullish CPI print. Thank God for it. Gave us that momentum that we kind of needed to get that breakout. Now, when we come back on a weekly chart here, we do have that weekly breakout. This candle does have to print, though, like the way it looks right now on Sunday. So as long as we print a candle body above the neckline of the double bottom, that will give us the actual confirmation that we do have a weekly double bottom. So once we get those weekly double bottoms, I do feel like the trend has shifted. We should be expecting higher prices and so forth. The one thing I did notice is we came right up against the 38.2 for stop, hence why prices kind of halted there, and we're kind of pulling back now. 38.2s, whether you go up or down, they're going to be your first stop, and this is kind of where trends either stop or trends are going to go through and continue higher. So if we fail against this 30.2, this is nothing more than just a dead cat bounce, and we would most likely probably have to retest these lower levels again.
So you think we will go down to 80K?
I don't know about that. I think if we fail against here, we start getting market structure like double tops, then we're going to be heading right back down, and I don't know how much further we'll have to come back down to, but that's usually kind of what I would expect if we do fail against here at these 38.2s. Otherwise, if we can just consolidate instead, we just consolidate here and then continue higher, that'd be better. And then until we're in this zone, the short reload zone, I don't really see it being too dangerous yet, because ideally this is where I want to be hopping off, taking profits, where I would be looking for shorts, where the previous highs were, etc. As we try to attempt to get back to the all-time highs. I do think seasonally this is kind of just like a seasonal trade. I don't think we're going to be breaking out to any new all-time highs, nor do I think this is like a start of a bull market. If anything, this is like a nice kind of push towards a bullish trend. And then maybe probably by like spring or early summer, we get that rollover. But that's if we can actually break through and get higher here. We also have a 200 SMA above us. So that's going to act as like a pretty big wall once we approach that as well. So yeah, just a lot of just sitting and waiting. Like we've been loading up Bitcoin against these double bottoms, and so now we just have to let the setups play and stuff. So there is some bearish divs building on the MACD, so that is one thing to keep your eyes open for. Once those bearish divs do confirm on MACD, this thing probably will roll over. We still have room before we're overbought though, so I do feel like we can get maybe one more stab higher, and then maybe we do start getting that momentum rollover. So hopefully not. Ethereum, same thing. We actually did break out of that level here that we were talking about on Tuesday. So we do have this little bit of a wider W kind of coming in here. On the weekly, we do have a weekly W slowly coming in. We still have a neckline just a bit above around here, like around 3,400. So we do need this candle to print higher than that middle neckline there to get that confirmation that this is a weekly W. But so far, it is looking better and better. I do like these type of structures and patterns. Yeah, I think it's just we're getting somewhere. We're getting closer to like some kind of pivot here. So bullish for now. I think in my books.
I'm bullish. I'm definitely bullish. What are you guys talking about?
No, I'm with you, man.
You're so negative nowadays. Where's your doubles?
I'm telling you. I mean, if you bought Dash,
like half a year ago, you made how many doubles? 20. Now you have 0 doubles.
It's not the same market anymore.
Dude, draw. Trader trades.
All market's not
no matter what.
The same way, So I mean, this one might hit a double. We'll see. Like I said, if you bought Dash, you would have hit a double on that trade that I mentioned yesterday. So,
bro, I will do my own trading group soon because I'm.
You should have hit that. Could have hit that, but no. Yeah, I mean, for the most part, things are just kind of like random names are popping off. Some other names are just kind of like falling back, retracing. I picked up some Aster, for example.
Fucking Aster, it's still waiting. I've been holding that position for at least 1.5 years.
Yeah, it tried to break out yesterday. It failed. So now we have to kind of wait for it to come back up. And then if we can actually get that breakout from that level, then off we go. But until then, we just have to wait and let the market do its thing.
So my thing here, or reasoning is that I do think that all the big memes, like I said on Monday or Tuesday, that all the big memes will rocket once the market comes a little bit back. So this would be Dodge, Bonk, Pepe.
Shib.
It's always like that inside.
Yeah,
I don't know about Fartcoin, man. It's such. Who is trading Fartcoin really?
I don't know. This was like a really big cult meme coin, so and you can see the
consolidation.
You can see the
they don't do any revenue. Look at Bonk. Like they have real infrastructure. They have revenue there. That makes sense. Sure. Pepe, same thing. Dodge.
Coin.
I mean, they have Elon.
But yeah, I mean, I like Doge. I like Bonk. I do own a little bit of this, but yeah, I mean, I wouldn't want to chase this. Like that's actually looking kind of nasty. So I'm noticing a lot of alts are starting to kind of like form these type of patterns. Obviously, if we break and get that double top structure, I would just hop off right away. So as you can see, potential M's could be forming here. So hopefully we just kind of come down and curve, and then we can get that nice double bottom instead and get a trend continuation type setup versus a breakdown, right? So have to just wait. Like it's the hardest thing about this industry and like this market. It's just like it's a lot of just waiting. You try to buy these double bottoms, you get washed out. You try again. Here we go. And then at that point, you just have to let your setup play. I mean, you could take profits if you're already in profits. You know, some people like to just do like a simple 2-to-1 risk reward ratios. You know, I'm always trying to hit doubles. So for me, it's like, fuck. It's a long way for me to go. So I'm just sitting and waiting for a lot of these positions to just kind of pan out. Yeah. But overall, I mean, you can see the breakouts. You can see the double bottoms. You can see where the bottoms kind of came in, right? Like these little W's. You know, some VW or V bottoms and stuff. Those are a bit harder to trade, but even like comp is trying to put in a W here. So really just have to wait. The only thing that I do want to warn people is like, okay, this is kind of a red flag for me where, all right, you're seeing like Bitcoin dominance climb up, you're seeing the stablecoin dominance perk up, and then you're seeing the alt indexes pointing down. So what this indicates to me is that people are selling off their alts and going into just Bitcoin and stablecoins. So that pump that we saw yesterday in Bitcoin, it seemed like it absorbed a lot of the actions versus the alts. Generally, these markets are supposed to move together, but I was noticing that the alts were actually kind of getting bled out. So a little concerning in my opinion there, but let's see how that transfers over the weekend.
Well, the question is like, where do you get like safe yield if you have stable coins? Because a lot of these things are being hacked left and right, and I think like the risk reward is starting to be like not there. You used to get easily 10, 12, even 16% at some point. Now I think the average yield is what, 6 to 8.
Yeah, I don't think there really is like any one place that's safe. I think
6 to
there's
8
like
still beats any TradFi. You know, it's better than bonds. It's better, you know, better than treasury bonds. It's better than any banking institutions are going to give you.
Yeah, but remember, there's always the risk, right? There's the smart contract risk. There's the hacking risk.
Sure.
Bonds be hacked. It really can't.
Yeah, bonds are, of course, yeah, the you know, pretty, very, very safe. But yeah, I think obviously if I had $1 billion and I was looking to get interest on yield on $1 billion, that would be a little more complex question. But I think for the average person, even a lot of the average, you know, whales, getting 6 to 8% on a Binance, on a Coinbase, you know, something that's got, you know, proven history of if there is a hack, they're going to pay you back, they're insured, you know, things of that nature. I think that's fairly safe. Now, do you want to turn your money over to a centralized exchange? That poses another question. But yeah, I agree. For the risk tolerance or for the risk factor, you would like to see a little bit more.
Mm-hmm. I like the idea of like more like traditional stocks that, you know, pay out dividends, you know, 12% and stuff. Also, if you can build up a nice portfolio of blue chips, you know, a lot of blue chips do pay out dividends. And then if you can get into these blue chips early on, then, you know, you can establish some pretty good free positions. That's essentially what I've been doing last year and this year. Yeah, it's been a much more fun market than crypto, I gotta say.
Crypto's been brutal the last year. I mean, there's been some money making opportunities, but it's been a wild year, very unpredictable. A lot of people got wrecked in a lot of different ways.
Yeah, like alts definitely destroyed me last year. So this year, trying to focus more on like selective stuff. So yeah, but yeah, that's kind of it I have for charts today. I don't have any new picks for us. Just the stuff that we looked at on Tuesday, and then yeah.
What's your line in the sand? If Bitcoin gets above it, you're flipping from, you know, minor pump to, all right, bull market's back on.
Once we break above this 38.2, I guess. Once we're back in 100K.
Okay.
Once we're back in 100K, I think psychologically people are going to be like, whoa, you know,
ready to end it again.
You know, or people are going to just nuke it at 100K. So I don't know. I mean, I'm bullish now. Like, I think like once we get that weekly W confirmed, like that's like my signal of like, okay, game on. And we're very close to it, right? Like I said, like we just need to wait till Sunday, and then get that confirmation. Like, we are breaking above the neckline, right? The neckline's down here. Got a nice big juicy candle. If that can actually confirm and stay this way on Sunday, and then we have the green light for the market to rally. So
I've seen a lot more ETF flows lately. Also, I'm going to share my screen quickly here. I think it's a good way of seeing where the market is with institutions. ETC ETF, if you look at the chart here, we almost have had $1 billion day in inflows. That's a lot.
Wow, maybe that explains why we got such a big move the other day.
Yeah, I think someone knows something. Obviously, there's the crypto act or whatever it's called. Is it Genius Act that is going through now in Congress related to crypto? But it's definitely
Clarity
I
Act.
don't know what act it is, but institutions are definitely waking up. And again, if you look at the all-time picture here, we're still not all-time high, but we are getting there.
Yeah, we'll be definitely talking about the Clarity Act when we get into some stories here. It's going to be further delayed here. And so far what they've released is a giant piece of shit for the most part. It's basically a banker-friendly how to control crypto and kill DeFi bill. So kind of what we expect.
Draconical law.
Mm-hmm. But one thing we did get, I think, in the last that we haven't talked about, it has been confirmed supposedly by Trump in the last 2 weeks here. Stimmy checks are coming once again. I don't know. They haven't set a date for it. I think it's going to be late Q1, early Q2. But yeah, I think they put a price tag. I think it was $2,000 per Americans as long as you're making under $500,000 a year. So get ready for those meme coins to pump and whatever other trend happens to be excited at the time. So keep an eye on them privacy coins. Keep an eye on your AI and robotics, whatever else, who knows what's going to be the new hot thing by the end of this quarter, beginning of next quarter. But as I understand, we do have a confirmation on the stimmy checks coming through.
Wait, how much are they getting? Do you know?
$2K, I believe.
Nice. Fuck. Are you getting it?
I don't think you're showing the screen at the moment, Nathan.
No, I'll do that right now. Sorry.
Are you getting
another thing? Something that's going to get Andrew excited here. Big news. NFTs are coming back, baby.
No way. Fuck out of here. Actually, I did see Blur and shit rallying yesterday. Funny enough.
Yeah.
I'm gonna buy some rocks.
NFTs, for whatever reason, I still haven't found an explanation for this, but I have seen a few people talking about it. They have pumped $600 million into the NFT market cap in the first 14 days of the year. I don't know where this is coming from. I don't know if there's some Pingu news coming out or what the hell. But people are excited apparently to get back into illiquid monkey pictures. So congrats everybody.
Yeah. So this is why the alt market is not rallying, guys. we got $600 million that are just being flowed into complete garbage.
Yeah, it's illiquid JPEGs.
Nice. But hey, Pump is still making all-time high revenues somehow. All their products are actually pumping.
Memes are moving.
Yeah.
I think this is an underlying sign of what's to come. Markets are simmering in the background. I don't know what the hell's going on with NFTs after being dead for 4 years. All of a sudden, no, we're back. What? No, I've heard no news. I've seen no stories. I've seen nothing to corroborate why this is happening. But for whatever reason, NFTs are rearing their ugly head again. I thought they were dead and gone for good, but guess not. As we mentioned yesterday, Got the CPI data, and a month-over-month and year-over-year coming in as expected. Core CPI actually coming in under the forecasted amount there. All bullish catalysts which normally would lead to rate cuts, but under this current administration, still looking very unlikely we're going to see that. This has shifted 1 point. When we checked it on Tuesday, this is 96.4. Now moved to 95.5. We do have some more major events coming up yet. Initial jobless claims should be in tonight. So we'll know that before the end of the week here. And then we've got some additional numbers coming out next week, CPI or core PCE numbers, etc. That could further push Powell and the Fed to cut rates. But the lines may be drawn, I think, with the subpoena that Trump put forward for Powell. He's going to continue to be a stick in the mud and simply not cut rates out of spite, which, yay, go Fed. I totally get the subpoena. The guy's spending over $3 billion on a renovation for a building that costs less than like $200 million. Like, we're building professional football stadiums for a third of what they're supposedly using to remodel a federal building. What the fuck? Makes no sense.
We need a good environment to work. Come on.
Yeah, they do. They need gold-plated toilets.
I'm expecting you guys to come with me with the plan.
They need gold-plated toilets, diamond-tipped astronaut pens.
HR officer, especially.
Yeah. So obviously, either complete incompetence or fraud. Either way, in my opinion, fair grounds for, subpoenaing them to come to court and testify what the hell is going on there. But obviously, people are trying to turn that into, he's not cutting rates. That's why he's getting subpoenaed. That definitely had a factor to it. Like, Trump is definitely using that as a stick rather than a carrot. But still, the underlying facts are the facts. Our government is ridiculously corrupt, and I'm all for anything that helps kind of sort that out. What else? Is there any other big poly market bids we were looking at coming up here?
Will the Iranian regime fall? Was that one?
Yeah, the Iran strike. There's a lot of news that there might be something today, but have not seen anything yet there. Israel to strike by the end of January. It has gone down, it looks like. What else we got? Powell out by March 31st has dropped. It looks like most people thinking he's going to go full term. Not going to abort him. It's going full term. I don't think there's too. Most of these are war related rather than financial related at the moment. But anyways, a lot of going on yet this week and next, leading up to the rate cut decision at the end of the month. Probably the biggest news since Tuesday, we talked a little bit about Bessent releasing the draft for the Clarity Act. It has since lost a ton of support. Coinbase pulling their support, Brian Armstrong pulling his support, and multiple senators saying that they're pulling their support. It looks as if this bill has turned into a banker slush fund. Banks coming in saying kind of the core, trying to remove one of the core aspects, which is the ability to earn yield on stable coins. Banks are trying to say they're the only ones that should be allowed to do that. More or less, this is cutting into their cake, and they ain't having it. So we'll see where this goes. There's a whole bunch of things in here that are not friendly towards DeFi, that are very friendly towards centralized entities and governments. I don't think this is the bill that we want. This is not something that we should be cheering for as an industry. Great to see they're starting to table some stuff, but anytime you see bipartisan on a bill, it makes you should be very skeptical that it's a full pork and corruption.
I actually went through it. There was a good thread about it, and basically, it's a lot about regulating DeFi, having all the banks owning all the stable coins, And basically, it's worse than Nika. So you would have to report everything what you do. And if you're building something in DeFi, you have to get permission to build it from the government.
Yep. Got to get permission to build a permissionless system.
Yeah, like what? I do get why privacy coins are pumping, and why they will be more bullish than ever.
No, I 100% agree. I think this bill hopefully will get the kibosh put on it. Although I've seen, again, just makes you wonder, like how powerful is Washington that people get corrupted so easily. Even like Cynthia Loomis out of Wyoming or South Dakota, I can't remember where she's from, but she's been one of the biggest, like earliest people pushing for crypto to get clarity and to be, open and allow DeFi, blah, 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 blah. And after this bill came out, as bad as it is, she's still praising it. Like, I don't know, not too many. There's probably, you could probably count the honest people, honest, uncorrupt people in Washington on one hand, if that.
Yeah, I agree.
Switching topics a little bit, something a little more fun, a little more interesting, a little alpha oriented. Delphi Digital, great post here. 10 predictions for 2026. Taking a look at some of the biggest trends and narratives they see either continuing through from 2025 or that will really come into their own starting this year here. Starting off the list, number one, AI agents will start transacting autonomously. This is being called the agentic, what the hell?
Agentic movement.
Yeah, there's another word that goes with it. Anyways, this is going to be big for both retail and more so for the enterprise level. We covered this a little bit with the Google story from Tuesday. Google has released its own, I think they call it a consumer protocol, agentic consumer protocol, that will allow bots to interact and AIs to interact with each other without the intervention of human participants to buy and sell products, access APIs, etc. So, this is going to be massive. Anything, a lot of accounting, a lot of import-export type stuff, shipping and logistics, very, very large enterprise type trade is going to be highly affected by this, made much more efficient. Yes, it is one more area where AI is potentially going to be taking people's jobs. I'm sure it will create some new jobs as well. Probably a net negative though, but it will also mean efficiencies and cheaper products overall for people. So I don't know where we fall here or there in terms of it's a net positive or net negative, but definitely a trend to keep an eye on. Lots of good companies, both in TradFi and in crypto, that you could speculate on in that industry there. Jan, you look like you wanted to say something about the agentic stuff.
No, I read today that 85% of the jobs will be disappearing in the next 4 years. So this will be fun.
We shall see. We shall see.
Andrew, you're muted.
I'm just looking forward to not having to order my own toilet paper anymore.
Wait, you gotta use toilet paper? I thought we have hoses out here.
Wipes. Sorry, wipes.
No, I was gonna say, like, man, 4 years is not a long time, and I think that's a little bit excessive. Like, I think realistically, like, 10, 20 years maybe, but I don't think 4 years. There's just so many moving parts. Like, there's just no way.
Having used the AI a lot in the last week here and seen some of the major pullbacks, I think 4 years might be a little early, but.
Like, dude, it takes like fucking 4 years to just pass one single bill, and then that takes like another 10 years to take effect. There's no way. I just don't see it happening.
Good. I'm telling you. Well,
80% of the jobs.
Maybe I'm overreacting, but like all tech jobs, like there's gonna be so much unemployment at the moment. Meta just started kicking out people. There's other companies.
Well, they fired 1,500 people from their metaverse project because their metaverse project was dog shit from the get-go. So
oh my god, is that
It wasn't only that. There were some other people, but yeah, it was one of the bigger departments. You're absolutely correct. But I'm just saying, I do believe that we are going to see major shifts.
Oh, for sure, and I think that's a good mindset to have, not just with AI, but with anything in general. If you treat it like you have 4 years to make as much money as you can because things are going to get shaken up and it ends up being 10 years, you're in a good place. If you do the opposite, you're kind of fucked.
Like
So
I would recommend just learning these like AI tools and like understanding how these things work, because like you can
absolutely.
still have an advantage by using these tools, these AI products, and like so it's
Or
not
just
all doom and gloom. I think if you're like smart enough, you take this and like learn this and use it to your advantage, you know?
yeah. Yeah, absolutely. I think there's still opportunities out there. Humanity will continue to exist. We'll figure out what the next thing is, what the next step is. I don't know what that is. It is scary and frightening, but it's also inevitable. So, take care of the things you can and try not to lose sleep over the stuff that you can't. But I think the thing that's going to hold AI advancements back the most is the energy and the production capabilities of producing chips and the actual hardware side of it. There's already a massive bottleneck there, and a war started for who can create the most chips, build the most factories to build more chips, get the energy, so on and so forth. Trump just this week coming out saying, hey, AI companies, you're driving up electricity prices all around the world. Obviously, particularly he's speaking to America. You're going to need to start paying more for that. It's not fair for all these AI companies to come in and jack up the average homeowner's price for electricity by 5x. So energy constraints and physical hardware constraints are going to continue to be a bottleneck, but it's one that they're well aware of and investing, well, literally trillions of dollars into in countries all around the world, including Greenland. There's some interesting stuff going on there. I know Jan's a big fan of what's going on with Greenland right now. So he's going to go stake his claim in Greenland. It's going to be the new gold rush, the new 1849 gold rush. It's going to be the 2026 Greenland gold rush.
Bro, I'm going to do a RWA project and start buying shit.
Start buying up land and start charging for geothermal electricity.
Land is always good to have.
Next trend here from Delphi for 2026. We're going to continue to see perp dexes eating traditional finance up. Just about every major L1 and L2 is either already launched their own perp dex or in the process of building and or buying one. As we see more and more of the traditional trading from centralized exchanges, etc., move into perp dexes. And then number 3 is prediction markets there. On the DeFi front, I think these are the 2 biggest trends to watch. Andrew, you've talked quite a lot about perp dexes. You've mentioned, I think, either last week or on Tuesday, some of the airdrops that are coming up, which ones might be the best to take a look at. If I remember off the top of my head.
Variational
was one.
Pacifica, EdgeX, Paradex, Extended. There's also Cascade that just came out. That one's very hyped, but I don't know, there's some fun around it.
Is this something?
There's so many.
Are these something that you see the average, individual person actually being able to capitalize on? Or if you're not using an AI, a bot, something like that, are you even going to be able to be competitive to get some sort of airdrop?
Yeah, if you're early enough, you definitely can. If you're a trader, like an actual trader, you can, you do get rewarded points, especially like on something like variational, where it's not just volume based. They are like monitoring like the duration of your trade, whether you're profitable, et cetera, et cetera. Lighter was easy because it was 0 trading fees. And so essentially you can wash trade and do all kinds of shit like that. These other ones are a little bit harder just because there are fees involved. So you can't do as aggressive kind of wash trading as before. But yeah, I mean, it's still doable. I mean, might be late on like Extended, for example, but like Variational Pacifica, I think those are still very early. Paradex as well. So yeah, I mean, you can just try to get out there and see kind of like, well, the best way I would say is just like monitor like how much volume you're doing per week, and then just see how many points you're getting, and then just kind of like measure that over like, like 3-4 weeks. And then you can kind of see like if the points are dropping or if it's like consistent or steady. Obviously, if the points are dropping, it means that it's getting harder and harder. More people are getting involved. If the points are steady, then it means like there probably isn't as many new traders, volume, and maybe you can continue to, recoup your funds there. But Yeah, I mean, I'm not doing anything too aggressively anymore. Lighter was pretty much everything that I was kind of pushing, and now I'm just kind of like chilling for now and focusing on some of the market stuff here. But yeah,
Nice. But yeah, lots of opportunities out there. I've seen some pretty good 2026 airdrop guides. Definitely check those out if that's your bag. Million ways to make money in this industry. But yeah, I like their quick synopsis here. TradFi, it's expensive due to fragmentation. Trading happens on exchanges, settlement through a clearinghouse, and custody through banks. You're dealing with multiple different entities for every step of the way with trading. Blockchain collapses that all into one smart contract. Now, Hyperliquid is building native lending. Perpdexes could become a brokerage, exchange, custodian, bank, and clearinghouse all at once. Competitors like Aster, Lighter, and Paradex are racing to catch up. Yeah, I mean, again, multiple layers of efficiency we continue to see with blockchain and blockchain products. You add in AI, it's not hard to see how all of finance is scrambling to get into this industry as quick as possible. Stable coins kind of leading that way. Prediction markets as well. We all seen what's happening there. The volumes on prediction markets continue to grow and grow. I've got an article here. Where is it? On gambling in the United States, hitting insane numbers now.
Yeah, I mean, like, what do you do when you don't have any other chance? Like, normies, how do you make money? It's only way of making money is through gambling. Like, if you want to make life-changing money.
You can become an influencer. You can do OnlyFans.
Show your butthole. Yeah.
You can.
What was the Canadian stats that came out? Like, what is yesterday or today? 46 of the population are on the verge of going bankrupt. They don't even have $200 or something.
Yeah, Jan, help me, man. I'm about to go bankrupt. I mean,
maybe.
Where's your fucking doubles? Give me some doubles.
Dude, the market's been shit, bro. I'm trying, man. They're fucking.
Marcus is recovering. We should be making 6 doubles per day now.
Oh my god, it's not double seasons yet, bro. Once we get the weekly W, I'm ready to call it double season.
Yeah, here we go.
We gotta get the weekly W.
Gambling is now the second fastest growing industry in the United States in terms of GDP growth, right behind small-owned daycares.
Yeah. Well, like, dude, if you look, like, all the ads, like, if you look at ads all across, like, the U.S.,
all gambling.
It's just all gambling now. It's like, what the fuck? Even like Instagram, Reels and shit. It's like rain bad.
But gambling was illegal before, and now it's legal in almost every state.
Yeah.
That's why there wasn't any casinos before that many. But now we have prediction markets, which are way more than gamblers.
Yeah. And it's
all guys, I have a call. I have to participate.
Get out of here, Jan.
Okay, get out of here. Okay. Yeah.
But yeah, I mean, I get it. There's a number of factors that are going in. Some of it's, kind of what Jan was hitting at. People feel hopeless. They don't have any other way to make money. But I think a lot of it's just the culture has shifted where people are fucking degens now, man. Like, but like, it used to be, again, it depends how far you want to get into this, but people had families and shit. Now people don't have families and they're fucking going to hang out with the boys. What do you talk about? Like, who did the best? Who did the best at fantasy football? Who fucking made the most on a fucking prop bet, blah, blah, blah. Like, so it's, some of it's desperation. Some of it's just the culture has changed so much and not for the better, in my opinion. People need to go home, start having babies, which again, kind of people argue, part of it's they don't have money. You can't afford to have kids and houses and stuff, which fair point. I get that. But, maybe it's a bit of the chicken and the egg kind of feeding each other here. But overall, I don't think this is a good sign that gambling is the second fastest growing industry in the United States.
No, definitely not. This is like a recipe for disaster.
Yeah, not a great thing here.
Yeah.
Oh, why are we doing this, computer? Come on, you got plenty of RAM. What's number 4 here? Number 4 for 2026, ecosystems reclaim stablecoin yield from users. Coinbase cashed more than 900 million of USDC reserve income last year just by controlling distribution chains like Solana, BSC, Arbitrum, Aptos, so on and so forth. Collectively around 800 million, while in annual fees over 30 billion USDC, and USDC sits on their networks. Now this is changing. Hyperliquid ran a competitive bidding process for USDH and now captures half the reserve yield for its assistance fund. Athena stablecoin as a service model is now being adopted by Sui, MegETH, and Jupiter. That yield accrued passively to incumbents is being reclaimed by the platforms that generate demand. That will, on these DeFi platforms, that typically obviously is going to make them more money, but it's also going to spill back to users, speeding up that loop of, and again here, perp dexes and DeFi taking over traditional finance. Now, Clarity Act, which you just talked about, trying to put a kibosh on that, trying to slow that down. My opinion on this is it's inevitable. They're going to continue to fight and push, but like cat's out of the bag, man. DeFi's out there. People understand it. Like, look at privacy coins. Do you think AI, you're not gonna be able to control AI. People are gonna go on AI and be like, how do I circumvent government blocking my freedom to spend money where I want or earn money how I want? Or, I don't want to have to use a bank. What can I do? DeFi is not going away. Like, unless you nuke the entire power grid around the world and kill the internet and start over. This is one of those things. Yes, they're going to be able to slow it down with draconian measures. Yes, they're going to be able to make it more difficult, but they see they're losing grip on power slowly but surely. It's inevitability. It's a win, not an if, in my opinion. So,
yeah,
bully for DeFi, bully for Hyperliquid, and platforms like that pushing these envelopes. DeFi cracks uncollateralized lending. Absolutely, this is a huge one. It's something that we've actually looked into. Getting into ourselves here at Acquire.Fi. This is a massive industry right now. All the lending is all based off of, you had a deposit or it's in some fashion or another, leverage an asset like Bitcoin, Ethereum, or something else, for those loans, a collateralized loan as they have it. But there will be soon enough a way to have similar to the, we have in the traditional markets, your credit, right? You got to get a home loan, you go out, and get a credit card. I'm not putting up a car, a house against my credit card. They're basing off my credit worthiness. Granted, that system is antiquated and not very good at assessing credit worthiness. It doesn't reward good behavior in terms of are you actually going to pay the loans back? It rewards people that make credit card companies money. That's how our credit card system works right now. But that being said, there is a system for uncollateralized lending in TradFi. If DeFi cracks that, you think banks are mad now? Holy shit! wait till credit cards go DeFi. Wait till small business loans and small personal loans, home loans, etc., go DeFi, and they don't have to rely on the traditional banking system for uncollateralized lending. My word, it will be glorious, and there will be a backlash like you've never seen before. That'll be the last dying breaths of the fiat and TradFi oligarchy system. Can't wait.
The central banks, man, they know how to keep their power. So
they know how to squeeze. Yeah, central banks also. I love people like, U.S. doesn't have a central bank. It's called the Fed. They are in every manner outside of their name a central bank.
Yeah.
Number 6, on-chain FX finds product market fit. Stable coins representing 99.7% of the total supply. Dominance could peak. Traditional FX, multi-million-dollar market riddle with intermediaries, fragmented settlement rails, and expensive fees. On-chain FX collapses by the stack by enabling all currencies to exist as tokenized assets on a shared execution layer, enabling multiple intermediary hops. This is going to be putting FX quant on absolute steroids. It's going to be pretty insane. The FX that we see now with quantitative trading is pretty wild. But as it mentioned, major inefficiencies, just like we looked at back here in number 2 with, perp dexes taking on TradFi, where there's multiple layers of participants for one transaction. It's even worse when it comes to FX. And again, smart contracts and blockchain enable massive improvements in efficiency. So for FX traders, probably cool for you. For people in the TradFi FX rails, not looking great. Gold and Bitcoin leading the debasement trade, 60% gold surge. And this article was probably written before the last couple of days, where gold and silver have both spiked to new all-time highs.
Yeah.
Macro setup supports continued strength. Global central banks are cutting. Fiscal deficits persist through 27. M2 is breaking highs. Fed is ending QT, so on and so forth. All the catalysts that we've talked about I'm horned for 2026, man. I think we got fun quarters ahead of us yet.
Yeah. I think the first half of the year, yes, I'm with you. Later half of the year, I feel like it's going to get sketchy.
Yeah, I could see kind of like through till August, September, and then, we're pretty close to the elections by then. Most of the stops they're going to pull out, massive QE, stimmy checks, things that try and win over votes probably will be settled by then. You never know. I think probably Q2, Q3, most of Q3, probably pretty sexy for us.
Mm-hmm.
But yeah, Q4 could get ugly. Number 8, love this. I think we've already started seeing this happen. Exchanges become everything apps. Coinbase, Robinhood, Binance, Kraken. No longer just exchanges. We've seen Coinbase on an absolute buying spree last year. I think they had 10. They closed out the year with 10 acquisitions, getting into anything and everything that they possibly can. Payments, wallets. I mean, you absolutely name it, they're in there. Coinbase, has the base operating system. Base is the interface layer. USDC as the revenue floor. Deribit for derivatives. Robinhood's gold membership grew 77% year on year. Again, these big players are going after everything, becoming super apps, all-in-one stops. Now, again, there's a reason that Coinbase, Brian Armstrong has been so involved in the Clarity Act. It's not because he's for crypto. It's because he's for himself and for Coinbase. He wants regulation that's going to help them continue to grow and dominate market share and squeeze out, the potential competition in DeFi.
He's also like to generate more revenue, right? Like, it's a smart way of like generating revenue based off like any kind of like new hot products. Like, prediction market was hot, so everybody started fucking jumping into it. Perpdex was hot, so everybody started jumping into it. It's going to be the same trend, like continuing on from here, and it makes sense. Like they want to keep expanding their business, they want to keep expanding their revenue, and it's like you said, they want to be like the dominant, kind of company. It's like how like Amazon, these guys kind of run their business. So
yeah, and you see, we had the same thing with Amazon, with Google, with Microsoft, with the banking system. There's a few major players that control most of the market. However, it's gonna be interesting to see at some point, probably not this cycle, maybe not next cycle, but when they get big enough, seeing the battle between the exchanges trying to be super apps and what we're seeing as, DeFi offers such a better efficiency model. Centralized exchange is certainly better than TradFi, but they still, when you're dealing with a, centralized exchange, they have lots of those intermediary and other systems that they have to flow through, custodians, et cetera, where, again, some of those capital efficiencies are not available. You're kind of trading off security and ease of use for capital efficiency there. So that will be the next battle, maybe next cycle. The cycle after that is, as we really see DeFi come into its own, does CeFi crush it, or can they both survive in the future? I certainly think there's room for both, but we'll see.
Yeah, only time will tell.
Privacy infrastructure catches up to demand. I think that's a great saying there. Huge demand for privacy right now, becoming more so than ever with things like the Clarity Act, MiCA, all these crackdowns we're seeing around the world going after people's privacy, whether that's your bank account, whether that is your personal online data, your information, whatever. There's a huge and growing demand for privacy. Infrastructure is still lacking. I think 2026, we see funding and cash flow into the privacy sector more than ever has before. And we see some of those gaps in the tooling, in the infrastructure, in the options of portfolio products available in the privacy industry continue to grow and catch up a bit to that demand, which much needed and be very beneficial for all.
Yeah, I mean, you can see it across the charts. All the privacy stuff is just blowing up here right now.
Yeah, I think if I can get this to load here, that's my first chart I had up here, the first article I had. Yeah, privacy tokens outperforming in 2026. 80% of projects above 100 million market cap up to year to date. Leaders like XNC, Dash, and XMR.
Yeah,
ripping.
Yeah. We fucked, man. I wish I bought that Dash. Damn.
There'll be other trends to chase, I'm sure.
I know.
And finally, number 10 here, altcoin returns stay dispersed. Blanket rallies of previous cycles not coming back over $3 billion in token unlocks. Loom, competition from AI, robotics, biotech has intensified. ETF flows concentrate into Bitcoin and a handful of large caps. Yeah. While overall market pumps, I don't think it'll be as violent as where we see, all alts pumping super, super hard. There's going to be niches that pump. There's going to be top projects that pump. And part of that is due to just the absolute dilution in the market. So just the number of failed cryptocurrencies by year, not total cryptocurrencies. There was over 11.5 million cryptocurrencies that failed in 2025 alone. We used last cycle, we didn't have that many tokens total ever in existence. Obviously, this is mostly meme coins, but still, point being, there's how many L1s now, how many L2s now, how many perp dexes, how many prop bet sites, how many, pick your narrative, pick your trend, pick your tech. There is, where previously there was 1,000 total cryptocurrencies to bid on, there's 1,000 in every single sector now. So dilution is part of that. We've seen a bit of a consolidation. We've seen a bit of a wash out of projects, but not anywhere to the extent that's going to move us back into, last cycle type of numbers there. So, but
yeah, that's what I keep telling you. I'm like, dude, like 2-3 years ago, we were able to hit like, hundreds of different doubles, like, especially in like the seasonal kind of trade. But the last year and a bit, it's been harder and harder just because like there's just not enough liquidity. So like at best you might hit a double here and there, but it's not like the old days, man. With the old days, you can hit like 10 doubles in one day and be like, oh fuck, crazy. So it's tough, man. It's a tough market there right now, I gotta say.
Yeah. That being said, there are still going to be opportunities. So got to keep your eyes. You got to stay more focused and work harder, which is not what we would like to hear. We want the easy days back.
Yeah. Stay disciplined, boys.
Yeah. But yeah, shout out Delphi Digital. Check them out on X at DELPHI_digital. They post a lot of great trading stuff, new projects popping off. And I think this is a great article, a great place to start with them. So shout out to those guys for some great content. And I think we'll probably go ahead and wrap things up there. Nothing else too breaking. Hope you got some value out of today from the charts, for some of the stories we covered. Hope it's going to help prepare you to capitalize on what's left of this bull run even better. If you've been around this long, if you've been following us since we started this, man, you've seen a lot of ups and downs. Props to you for hanging in there. It will be rewarded for sure. I guess one story I was going to cover, we didn't, but CZ predicting, I think he said 250 or 300K Bitcoin, something like that, saying, it's not a matter of if, but when. I agree with that. I think a lot of people are taking that as, this cycle may not be this cycle, but if you're patient, if you have the discipline to hold long-term, there is still 2, 3, X and some people believe 10X in Bitcoin. It's just a matter of time horizons and zooming out. So, be disciplined, make your plan, work your plan. And we'll see you next Tuesday.
See you guys next Tuesday. Hope you guys have a good weekend.
Later.